Good evening, everyone. Hope you've all had a wonderful day on this Wednesday, November 30th, the last trading day of the month. It was a wild and wacky ride. We got a lot to cover, so I'm gonna try to run through it as best as I can. Uh, but a lot happened today. We had Fed speakers on talking. We had Jerome Powell come out. Basically, nothing new. He didn't say anything crazy as far as inflation's over, etc. The market initially over the last couple of days was trying to go down, right? We're trying to trend downward. We're trying to sell off. On pretty light volume as well. The market was just selling off on pretty light volume. Yesterday, we put the daily down, right? The daily went from balance to down after we took out that balance low from the 22nd at what was that? 62.75. Once we took that out, the daily went to balance, right? So took that out, daily goes or went to from balance to down. Took that out, and then we come into the market today with the Fed coming out and speaking uh, around 1:30 today. We did nothing but pretty much just chop around in previous days range. I mean, we didn't do a whole lot. Just chopped around. You can see here before that big spike up, right? All we did in A period was open up right around where the POC was. We had that 9 wide POC. We opened up above it. We pushed up initially, got to the afternoon rally high. There was a good short opportunity there against that afternoon rally high. As we got above it just by by a point, and then we backed off, right? And we flipped over. B takes out A's low. We're taking out, right? We're one time framing down now. And then B pushes, but we never get to the previous day's low. We also never get near that previous weekly low. The weekly low that I was talking about, we need to hold in order to keep this market uh, one time framing up on the weekly basis. If we had taken it out, we would have gone from one time framing up to balance on the weekly, and that's a goal that sellers were shooting for, right? As they were selling the market off. So in B period, we pushed down. Uh, we initially started B period with a set of single prints, not that they held. Eventually got filled later in C and in D period as we just chopped around, but C period took out the IB low, the initial balance low. Remember, the initial balance is the first two time frames of the day, the first 2 30 minutes or the first hour. So C period finally took that out, and then but not by much, right? Not much happened, not much extension, and then we found some buyers, some bids coming in as shorts were covering, and anybody trying to get long against this previous low and that weekly low, good risk reward for anybody that likes wide stops. They were looking to maybe rotate this thing back up to potentially fill and get that high day from the 29th. So, D period, we pushed, didn't get much extension. Guess what? We rallied back up. We got through the 9 wide POC. So, that 9 wide POC from yesterday is gone. Just chopped around for the next couple hours as we're waiting on Jerome Powell to come out and speak. Finally, an F period, after E, couldn't get above the opening. F period, we got a little bit of a liquidation break after we took out E stops, rotated lower, took out D stops, and then we pushed a little bit lower. Still could not get previous day's low. Didn't even get near the previous weekly low, right? That's that low that matters a lot to buyers and sellers. Couldn't take it out. G period, we have a poor low against F, meaning supply shut off. There was nobody willing to sell down here, and we rotate back up as shorts began to cover right before 1:30, before Powell comes out. H period, we continue to push up, and then finally in I, we pushed up in I period as the algos and short covering kind of started to step in. Once Jerome Powell started talking, We pushed up, we took out the single prints in the high day and filled that set, so that went bye-bye, right? That's gone now. We took out that afternoon rally high, right? That's gone. And I didn't trade I period. Anytime that there's somebody speaking like the Fed member, I'm not talking to him, or I'm not going to trade during this time. No matter how far up we push, it's just too chaotic and too wacky to know if we're going to push up, just because we ran some stops and then flush back down and then take out the day's low, because that's happened before. It's not something that is impossible to see. So I stay out of the market, right? Value is pretty much unchanged still. We spent a lot of time and a lot of volume down here, so volume stayed, or the value stays down here. I period pushes up. We create a large set of single prints, as all this whole area here is nothing but short covering. So there's a set of single prints. We begin to push up. In J, we take out that high day from the 28th where the gap started from that small gap down after we got back from the break, right? On Monday, we took back that gap, filled it, that's gone. Ran through that high day, that's gone. And then in J period, after it closed, we created another set of single prints right in here, right? So now we know we have another area where bids are. We get a little bit of a consolidation period right in here in K period, which just kind of chopped around. But every time you pulled back in K, it was a good opportunity to buy against those single prints, and you can see that here on the 5-minute chart, right? I think there's like a pretty perfect opportunity to buy in K period. I mean, against the 9 EMA, like this pullback right here, this bull flag. I mean, it doesn't get any better than that, right? You have single prints below. That's that market generated information, that's always good to know. We have single prints below providing a bid. So pulling back into that and the 9 EMA once we started to trend up is a good risk reward long. You take the long, we get below the 9 EMA. Maybe you look to get out and see if we fill the single prints to get back in, or you get long and do exactly what we did in K period, which was KL, you know, break that flag, push up higher, and then continue to ride the 9 EMA all the way up. That's a nice trend there. Uh, Good trade opportunity that was presented in K period. That's when I decided to step into the market. Was after we had solid MGI and the Fed speaker was done talking, right? We knew what the market had done. We knew what the market was trying to do now. It's trying to go up, and it had its eyes set on the gap above and the 200-day moving average. Well, finally, in K period, after slightly taking out J, we kind of just close inside, and then L, we pop, push up higher, and create another set of single prints, and then we finally get into the gap and price probe. That just means we spiked up in M period and closed at the highs of the day. We almost filled the gap. We still have a little bit to go. The gap fills at 41.0375. That's where the gap fills. So pretty interesting day. Kind of a wild day. Anybody that did accumulate a position down here and held it to the top, you're, I mean, one hell of a trader, and I hope you've made a lot of money on that move. Because I mean, even if you were to wait later on after you have confirmation and MGI market generated information to lean on, like that pullback in K to buy against those set of single prints, that's just a great risk reward opportunity there for a ride up. I was long a 4 lot of MES here, and then finally in L period, I decided to switch to a 1 lot mini because I was comfortable with the way the market was trending up. Switched to a 1 lot mini at 56, and then I exited that 1 lot mini at around 69.70. I had one at 69, and then on another account I exited at 70. And then I exited that full position of that 4 lot MES micros that I accumulated around 39 and 40s in K period. I got out of those as we pushed up in M period around 64s and 65s. So overall, a really good trading day for me as we had momentum and buyers stepping into the market after kind of a catalyst event today. So a good day overall. We've gotten into that gap. We are above the 200-day moving average. We're only above it by just with 2 time frames above. So one day doesn't make a market. We need to find acceptance above this 200-day moving average and acceptance into the gap and fill the gap. Once we fill the gap and find acceptance, maybe we back test the 200, maybe chop around it a little bit, and then finally get a rotation up higher. Maybe the Santa Claus rally is going to stick around coming into the year end, but pretty heavy volume today as well. Volume not to ignore. Really good volume on the day. We end with a triple distribution. So all that means is A's high to G period, G and F's low is one distribution. And you can see it right here. It's just where the high volume is, right? So all that area, that's one distribution. Then we have set of single prints, set of single prints, another distribution here. J's high to K's low. Another distribution. And then our last distribution is up here in M period, because then you have that set of single prints below. So you just have basically intraday gaps. So one day we gap up, another day we gap up, another day. It's kind of how you look at it. So let's go ahead and put in our destinations. We have taken back a good portion of that gap. We only have about 20 more points to go to fill the gap. And then, you know, the one time framing up continues on the weekly. The daily comes back into a balance where you're just now in a larger balance. Pretty much all of today's range will be the balance. And I'll show you that on the daily, the weekly, once I finish putting in these destinations. So let's go ahead and put in these. We have this poor low right here at 42.75, our low of day. Another thing not to ignore is the fact that we couldn't take out that weekly low. Now we have 2 weekly lows in the same area, as well as multiple days worth of lows in this area, meaning supply is shutting off here. There's buyers stepping into the market here. For whatever reason, there's buying stepping into the market. And now we're just going to go with and kind of follow along, right? That's that. Be dumb, follow price. As Tom, what's his name? Tom Canny would say, right? Be dumb, follow price. To yep. So we got that. We got where single prints start here at A's high at 70.50. Or excuse me, this is where single prints would fill. Single prints fill here. So if we do pull back anywhere into this area, you look for bids. You look for an area for a responsive buy. And that doesn't mean come into it, buy, and you hold the position and hope for, a reversal all the way back up to the highs. What it means is you look to maybe scalp a couple of points off as you will find responsive bids there. So just a good reversal type of trade. Counter trend trade is what you would look for in those situations. That's where single prints start. Sorry, I gotta be specific here. And let's set a single print start here at, or they get filled at I's high at 80.50 or 08.50, excuse me. Single prints fill. And this is just how I mark my charts, right? I don't want it to be cluttered with a lot of stuff on it. That I like to keep it clean. That way, whenever I come into the next day, I can see what's happening. I can see the areas that I'm looking for, price points that have meaning to me and maybe other traders. A lot of times these are very visual areas that the market will come to and either find support or resistance in those areas. Single print start. Remember another distribution. And then we have single prints fill here at K's high at 44. And I hope anybody that is watching can kind of follow along. I know it's very technical. A lot of this jargon takes some time to get a handle on, but it does make a difference if you are a trader to know some of these terms. We got single prints that start at M's low, 62. I almost got that perfect, off by one tick. 62. Single prints start. And then we have our price probe here at 63.25. Nailed that one pretty good, huh? 63.25. Price probe. And then you have today's high day at 83.50, where the gap starts. So the gap starts there. And as a buyer, you want to find acceptance above this price probe and then go fill the gap, right? As far as destinations go, upside destinations are today's high at 83.50 where the gap starts. The gap fill is the next destination at 41.0375 and then that 11 wide pocket 41.2625. So if we open up inside of M's range or above, then we look to fill the gap and rotate higher to this 11 wide POC from the September 12th at 41.2625. If we open up an M's range or below the price probe, then we look to maybe take back a set of the single prints, right? We look to take back uh, L single prints or maybe J single prints right in here and see how much we take back as we look to try to find acceptance above that 200-day moving average. Now let's look at our larger time frames real quick. Remember, the monthly is still in a balance. The weekly is one time frame and up still. We never took out that previous week's low, so the weekly is one time frame and up. We've been one time framing up 1, 2, 3, 4 weeks in a row now. Pretty much all this month we've been one time framing up. Let's go to the daily. And you can see here we're basically just in a big balance. We'd taken out that low here because then the original balance was right in this range, right? That was our original balance. Now the balance is just all of today's range, right? This whole day is now our balance. If we take out tomorrow's high, or tomorrow if we take out today's high, then we'll look to put the daily up. The daily will begin to one time frame up. We had a pretty good back test of the 20-day moving average today as well. We're closing above the 9-day moving average and the 200-day moving average, and we've gotten into this gap here. That said, we just had pretty good odds to get. when we were pulling back, there was an opportunity to go and fill the gap that was below. It was kind of a 50-50 chance, didn't really know. But what the market was trying to do, what the market's been trying to go up over the past several days, several weeks, market's been trying to grind up, and that's what's happening, right? We're moving up. Things are changing. Um, we've been setting higher highs, higher lows, higher high, higher low. The only thing we need to do to make a difference is to put the big boy, the monthly, from balance, right? We need to go from balance to one time frame and up on the monthly for things to kind of really start to pick up to the upside. That would mean a break of this trend line. That would mean finding acceptance above the 200-day moving average. That would mean coming out of balance on the monthly to the upside. And then maybe we'll take back a good portion of the losses that we made on this year going into 2023 and see uh, how we handle the Fed's policies. Other than that, folks, I hope you enjoy. If you've made it to the end, I do appreciate. Please leave a like, and if you're new, subscribe, as any follow helps. And if there's anything I could explain better, or maybe you're enjoying the content, please let me know down below. Hope you all have a wonderful day. Catch you in the next one. We'll see you.